Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Thursday, and we're now at the 26th of February, 2023, 5:35 p.m. Central Time. Thanks for attending the webinar. We had a completely full house. I was happy as can be. We always get some people that don't show. We put them on a list, and soon they won't get invites, but they're just the regulars that do that. They want their seat, but they don't want to use it. When we take a look at what's going on in the market, today was one of these days where GDP came out. The day was all about GDP. Every other report was nice, but not the same. Durable goods, by the way, no slouch, up 5.6%. They were looking for a decline. They got a big rally in that. And as I looked at the numbers that made up the GDP, you get some core numbers there that are still humming. And the question is, what do we do now? Are they coming down a little bit of the inflation readings that make up part of that? Yes. Are they breaking hard? No. Is it going to be enough for the Fed to pause soon? I don't know. I think this report by itself isn't. This report showed that the U.S. economy grew on an annualized basis, about 2.9%. That's pretty good. But I happen to think this is the peak you're going to look at because those rate hikes that began 10, 11 months ago, as you get into that 1 year to 18-month period is where the full impact is normally seen. And I think you'd agree with me. We have a labor market that is still on fire. If you looked at today's initial unemployment claims, where do they come in? They fell again. Yes, they're continuing or climbing each week a little bit, 10,000, 20,000, but they can't get the initials to stay down. And that's the people that they get let off now, and they immediately, for all purposes, are finding another job. And it's easy. And we're not even yet at the spring and summer months where people are going to want all the outdoor service staff. So how do you do that? I don't know. And do I think the Fed's going to have to, at any point here, just stop raising rates? Not just yet. I'm not in that camp. I think there's between 2 and 3 hikes, not, starting with the one now in February next week that we're going to get. And maybe then if the numbers come in softer, fine. But if labor stays really sticky like it is, it's hard for the Fed to just pull the plug and stop and say, let me see. Let me see what? People keep making jobs, new jobs, money, they're going to keep buying, okay? We did see Visa, MasterCard, and some of the others say they are seeing a softening of use on the credit cards. It's probably because the numbers have swelled on them and people are having trouble paying them at 20% interest. When you take a look at the weekly chart of the S&P, it's impressive. It's up 2%. We're back into a resistance area of closes here. You've been here at the 4065. Can the market get up and over 4100 is the question every technician keeps asking. I see it on the news all the time. We're winning the battle. The market is winning the battle of the swing lines. They are now higher lows, higher highs. We had been sideways. Now that's in place. The market cleared, and it has stayed cleared and fighting the 200-day average, which puts it up now into the Bollinger top, and there's your resistance, the 4112 area. What did I say? 4100 is going to be a big number for a fight in this market. And what else is happening is, with time, the 18-day average is catching the 200, the gray line. So that could be another form of a bullish crossover. In plain English, there ain't nothing bearish on this chart. In addition, take a look with me. Are we embedding? You cannot count today's numbers. You got to go to Thursday's settlement because we don't know how you'll finish. But both numbers on Thursday were over 80, both on Wednesday, and both not on Tuesday. So right now, where's the key of this market? Friday's close. Markets typically don't like to embed. So you're at your most overbought peak now. Are they going to be able to break the market or not? I'm pointing it out to you because it'll be interesting. The market that has embedded is the Nasdaq, and its objective is the Bollinger Band right up here, 12,252. But right in front of it is the 200-day average of 12,153. That should be the resistance. What's carrying this market? Ta-da! Tesla. Tesla's carrying the day. As Mr. Musk, Trump I almost said, as Mr. Musk came out and pointed out more cars, they're doing fine. Yeah, they lowered the price. We don't quite know what they're making per car, but the fact that they're going to be over 2 million cars is impressive. And the public loves their cars still. And the price point, well, if he keeps dropping it, he'll find buyers. And at the same time, who's he putting pressure on? Everybody. Now, it was interesting what Mr. Musk also said. He thinks his biggest competition is going to be Chinese EV makers, not American ones. On an international market, I think he's right. In the March micro Dow, higher lows, higher highs, back in an uptrend. So we're not seeing downtrends in any of these at this point. We are overbought. Were we able to embed in the Russell? Okay. You can't count Friday because we don't know how Friday's going to close. So on Thursday, both numbers over 80, both over 80 on Wednesday, and bingo, over 80 on Tuesday. So here's your strength in the marketplace. It is in the Russell that is acting the best. And if the market were to just break down until the red line closes under 79, I think it's a finder of buyers in the market. Close under 79, that part of the game is over. Then we get to the VIX. You are oversold. Downside target 1775. I'll repeat. If it gets to wherever the lower Bollinger Band comes in and hits it, that's where I think the pros will, again, write calls. They'll do it on futures. They'll write calls looking for up here. A lot of people ask me why I don't put up the futures on this. I don't want to spend the money. I don't trade the VIX, all right? And being a professional broker, that's my livelihood, they don't charge me what they're charging you for a rate. If I go in, I got to buy the CBOE package, I don't want to do it. So this is good enough. I really don't trade the VIX futures. So what do I need it for? So I'll guide you, but I trade the other futures, obviously for my clients and running it. We just don't have a lot of people that trade that. In the T-bond market, still have higher lows, but lower highs. So now we're starting to see the markets that are saying, okay, what do we do come next Wednesday? We have the FOMC meeting. Then we obviously have, after that, we're going to have the conference, the press conference. What's going to be said? What is the story here? Are we seeing where it's peaking? I hope somebody asks the question. The Bank of Canada said they're going to pause now. Is this where we pause? If not, why aren't we pausing? What's the difference? And let them answer it. I was reading on the Bank of England. Their inflation rate's 10%, and people are saying the bank's going to pause. How do you get to 2% goal if you've got a 10% inflation and you're pausing? I read these things. I'm amazed. I could be wrong. I've been around this a long time. On these bigger issues, I'm generally on the money. On the 10-year notes, you have higher lows, lower highs. Now, if you get underneath this break and you close under the 114.2 area, just anything under there, you got a problem. Then you're probably going to see that market down. If you start taking the interest rate futures lower and get them to start trending, it'll weigh on the stock indices. In the dollar index, you can see how the market is just sort of hanging here. But with this bearish embedded reading, until it's lost, no. I think the rallies are getting sold by the pros, and therefore I think you're buying the breaks in the euro on days like today, as long as you keep the embedded reading. Take the enhanced Bollinger Band course if you don't know what I'm talking about. When the slow stochastics develops, the blue and the red line going sideways over 80 or sideways under 20, it's called locked in. And there's a way to handle that once it's locked in until you either close under 79 when you're bullish or over 21 when you're bearish. I teach you how to do that, and I'm not going to be able to review it every single time that we do something here. I help you in the morning and I want you to join my morning subscriber videos. That's where the fun is. Higher high, lower low, but embedded. So in the pound, I'm still there. So the currencies that are saying, hey, we're going to do another rate hike are getting bids. That's what's happening. You have the European Central Bank online for a half point. You have the Bank of England online for a half point. And you have the U.S. Fed online for a half point. And they're all just hanging right in there. In Bitcoin, as long as you stay embedded, I think the pros are looking to buy the market, still targeting the 25,300 level. In the differential between Brent and WTI, I'm questioning. I began doing it the other day, as you know. Are we trying to peak here at, let's call it the 6.25 area? When we look at the market, you have a market that is, you can't count, you can count the close, not in WTI. Both numbers were over 80 here, both over 80 there, and Tuesday both over 80. You embedded by the skin on your chin, but you did it. If you're down much, you'll probably lose that reading and call for a break to at least the 200-day average. But until it's lost on a closing basis, it's more bullish than bearish. You're flirting here with it, okay? Not there, as you can see. Did we get 3 days in a row with the settlement Thursday? Nope. That's all you have to do. So you have an overbought market that it's nice that it's up there, but my work would be screaming, don't buy it. In the heating oil market, overbought. My work would scream, don't buy it. Natural gas. So today I was telling people in the morning subscriber video, before it hit it, I said, you are so close that I think you've got to lift a big chunk of your shorts. I'm sure we're going to hear something from Freeport, and we did late in the day. They got permission to start cooling the pipes that's going to carry the liquefied natural gas. So it's an 11-day process. In the meantime, they've got to have other permits that they start pulling for the liquefied trains and other parts of the factory. As this goes, you're probably looking later in February, but it's there. You're going to start turning this around from Freeport not doing anything to suddenly there's going to be a need for the nat gas and a new demand source is coming back to the market. Does that mean you go from bear to bull? No. This is a bear market, but it's also hit an objective. And as far as I'm concerned, the smart money took money off the table today, and that's where they're going to look at it. Now, the one thing you have me talking about always is joining me in the mornings. And I want you to join me in the morning. In the morning is where we lay out the trades. So starting at 5:20, 5:30, I start recording and bring you in with all the news that's happened in Asia, Europe, and what's going on here. Bring you the highlights. What reports are coming out? What's the market looking for? Then we start opening the charts. And remember, the chart action's already going in the future, so it's not the stock market with the pre-market. You're going in the futures. There's only one market generally not open in the meat markets. The others are all rock and roll time already, and we go through them. We lay out charts. You see how this looks? This is how the typical chart looks. If we have window envelopes in blue, you're going to see them. The other are key moving averages, the Bollinger Bands, and the slow stochastic. 5 indicators. You can handle 5 indicators. Each is built to be a filter on the other. And when they get to the point where they say buy or sell, it's exactly what I'm doing. When one of the parts of it says no, we do nothing. You're waiting for the setups of each one to come into play. So it's not based on any one thing. One indicator takes over the day. I admit that. And it's the slow stochastic indicator. I explain why and how it works, and you work with it from there. So you not only get a video in the morning, on the weekend, we go through the weekly charts this way, and every now and then we'll flip back to a daily because I want you to buy, sell for the longer pull. And yes, when you trade a weekly chart, it's longer by its nature. In other words, your trend is going to be a longer trend, unless you get stopped out right away. So how do you get all this and how do you work with it? It's simple. To join, I want you to just move your cursor to the top up here. You'll be taken to the area where we have our research page. Read it, join us from there. Same thing to do. You can go on the website and go up to research. You can call my staff. They'll work with it. Join us. I'm Ira Epstein. You have a great day. I'll see you all over the weekend. I don't know if I'll do it tomorrow night or Saturday as I do the weekend edition of these. Take care.